Welcome to the News Hour. President Trump stunned many this afternoon by pausing higher tariff rates on most countries for 90 days, just hours after they kicked in. The president raised tariffs specifically on Chinese imports to 125% after Beijing retaliated overnight. And a 10% across-the-board tariff that took effect last week remains in place. All of this led to an historic day of market rallies after multiple days of steep drops. The Dow closed almost 3,000 points higher, up nearly 8%. The Nasdaq rocketed to its best day in nearly a quarter century, up 12%. And the broadest measure, the S&P 500, had its biggest gain since 2008, up 9.5%. Lisa Desjardins begins our coverage.
An extraordinary change of course after a night of market turmoil and action by other global powers.
Well, I thought that people were jumping a little bit out of line. They were getting yippy, They were getting a little bit yippy, a little bit afraid.
Speaking at a NASCAR event at the White House, President Trump explained why he paused a wave of tariffs on much of the world hours after they took effect.
A deal's going to be made with every one of them, and they'll be fair deals. I just want fair. They will be fair deals for everybody.
Earlier, Treasury Secretary Scott Bessent insisted the pause has always been part of President Trump's strategy.
President Trump created maximum negotiating leverage for himself. We are willing to cooperate with our allies and with our trading partners who did not retaliate. It wasn't a hard message. Don't retaliate, things will turn out well.
But before the announcement, Europe did retaliate with 25% tariffs. And China responded with 84% tariffs on U.S. goods. That in response to earlier tariff hikes from the Trump administration.
The U.S. continues to impose excessive tariffs and exert extreme pressure on China. China firmly opposes and will never accept such hegemonic and bullying behavior.
President Trump's mercurial tariff policy has led Europeans to rethink their trade alliances. Spanish President Pedro Sanchez met with leaders in Vietnam, which also faced steep tariffs now on hold. He put it bluntly.
No one wins with trade wars. All countries lose.
This a day after House Republican Whip Tom Emmer told NewsHour that the Treasury Secretary pledged in private yesterday that wide negotiations are starting now. President Trump signaled as much at a Republican dinner last night.
These countries are calling us up, kissing my. They are dying to make a deal. Please, sir, make a deal.
In fact, just as U.S. markets were opening for the day, Trump gave investors a specific message, posting on Truth Social, "Be cool," and "This is a great time to buy." Before the White House reversed course, businesses spent the morning tentatively lowering their forecasts. Delta Airlines CEO told CNBC they no longer were expecting growth in 2025.
Everything has stalled, and so there's been a freeze until we get better clarity, and the hope is the administration moves quickly through the uncertainty. I think our economy is going to continue to lose steam.
Echoing that view at the time, J.P. Morgan Chase CEO Jamie Dimon on Fox Business.
Do you personally expect a recession?
I am going to defer to my economists at this point, but I think probably that's a likely outcome.
On Wall Street, a sell-off of U.S. Treasuries overnight roiled the bond market as some investors fear the U.S. may no longer be a safe long-term bet. Asked if that was a factor in freezing tariffs, Trump told reporters,
The bond market is very tricky. I was watching it, but if you look at it now, it's beautiful. The bond market right now is beautiful. But yeah, I saw last night where people were getting a little queasy.
On Capitol Hill today, Senate Democrats reacted sharply.
Donald Trump is feeling the heat from Democrats and across America about how bad these tariffs are. He is reeling, he is retreating, and that is a good thing.
Speaking to Congress, U.S. Trade Representative Jamison Greer was asked if this was all a ploy to help large investors buy low.
If it was a plan, if it was always the plan, how is this not market manipulation?
It's not market manipulation, sir.
Well, then what is it? Because it sure is not a strategy.
We're trying to reset the global trade system.
Who's benefiting? What billionaire just got richer?
Elsewhere in Washington, Michigan's Democratic Governor Gretchen Whitmer said she supported bringing back American manufacturing, but said the president's tariffs have been hard on her state, which President Trump won in 2024.
I'm not going to sugarcoat it. These last few days have been really tough for Michigan. It really is a triple whammy: higher costs, fewer jobs, and more uncertainty.
For how long? That is also uncertain. For the PBS News Hour, I'm Lisa Desjardins.
And joining us now to discuss all of this is Simon Johnson. He's a professor at the MIT Sloan School of Management and the former chief economist at the International Monetary Fund. Also with us is Douglas Irwin, an economist at Dartmouth College and the author of Clashing Over Commerce, a history of U.S. trade policy. Gentlemen, welcome to you both. And Simon, I want to begin with you. Just your reaction to the president's decision to pause most of those tariffs for 90 days. What do you make of it, and also why he did it?
Well, it's a remarkable climb down, Amna, really. I think the last week has been chaotic around the world. A lot of alarm, a lot of dismay across the American business sector. It really felt like a strategy that had no point, no coherence, and it was very badly communicated. So I think it's a big sense of relief for me personally and for pretty much everyone in the country and around the world that we've come to a slightly better, clearer place.
When it comes to what may have gone behind this decision, as you saw in Lisa's report, there was a sharp sell-off in U.S. government bond markets earlier today, and that followed Treasury yields, which typically investors would buy, rising the most that they have in decades. Why is that sell-off significant, and could that have impacted the president's decision?
Well, a key piece of American strength is the idea that we're a safe haven for the world. And a safe haven means when something goes wrong, either out in the world or in the United States, people come into American government debt, into treasuries, which should mean that the interest rate will fall. But instead, the interest rate was rising. So there was a pressure and at least a signal that we're not as safe as we thought we were. And perhaps there's a crisis of confidence in the United States. All these thoughts were going around. So I think the White House got the message that the bond market was signaling a lack of confidence in the strategy, and it was time to back off.
So, Doug, some relief in some countries, many countries, who now get a 90-day pause to negotiate some of those terms. But, of course, the trade war with China has only ramped up. When you look at these tariffs now between the U.S. and China, how do they compare with tariffs we've seen in the past?
Well, this is really historically unprecedented to have the world's two largest economies that had been highly integrated, relatively low tariffs on one another, raising tariffs to such an extent. I mean, over 100% in the U.S. case, up to about 84% in the case of China. You can compare this to past tariff acts, such as the Smoot-Hawley Act of 1930. That was more broad-based in terms of its impact, but in terms of the total change in the tariff, doesn't even amount to this. So this is really an amazing disintegration of trade between two large trading partners. And of course, we still have tariffs on other countries as well.
And those other countries, of course, as you mentioned, still facing that 10% baseline tariff. That's on top of, we should mention, too, existing tariffs that went into place on Canada, Mexico, on steel and aluminum. What do we know, Doug, about the kind of impact that those existing tariffs will already have?
Well, they'll raise prices for consumers, and a lot of consumers here are American businesses that depend on intermediate inputs and components to undertake production domestically. So it's not just households, it's businesses that have to adjust in terms of these higher costs. We expect to see some retaliation as well. The European Union has already indicated as much. Obviously, a shrinkage of trade and uncertainty about whether these tariffs will remain in effect or whether they might be lifted at some point as well. And one thing that's underestimated or sometimes misinterpreted is the poisoning of international relations. So these are very disruptive. They've been imposed, as President Trump has said, on our friends as well as our foes. We have a lot of free trade agreements around the world. Those are getting ripped up to some extent. And so the disruption is worldwide in some sense.
Simon, pick up on that idea. It struck me earlier that the Treasury Secretary said this 90-day pause will allow for negotiations for those countries to unfold on a country-by-country basis, and that President Trump wants to be personally involved, he said, in each of those negotiations. What do you make of that approach to do this country by country?
I think there's going to be more than one 90-day extension, honestly. It takes a long time. A proper trade negotiation isn't 10 minutes in the Oval Office and 30 minutes down the hall to sign the papers. You've got to spend days and sometimes weeks if you want to make real progress. Now, if it's just for show, sure, that's relatively quick. But 70 countries negotiating substantially with the United States and actually getting to a deal that we wouldn't otherwise have had, that takes a long time.
Doug, what do you make of that, this country-by-country approach? How do you see this playing out?
Well, first of all, you have to sort of ask, what is the deal that we're looking for from other countries? Other countries don't affect their trade deficit directly. I think the extent of unfair trade practices has been exaggerated, and we're hitting countries that we already have free trade agreements with. with these higher tariffs. So we have actually a trade surplus with Australia. We have a free trade agreement with them. We have a trade surplus with Peru. We have a free trade agreement with them. And so it's quite indiscriminate who we're hitting with these. And the question is, what sort of deal, what sort of the bilateral bargain is that we're asking for?
Simon, holistically, when you look at this, the fact that these are now unilateral deals being negotiated, the ramping up of a trade war between the two largest economies on the planet, does this suggest the end of the globalization era to you?
It's not the end of anything. It's the beginning of a phase, a new phase of stepping back from globalization. So deglobalization is what people are calling it. But I think the key, Amna, is what happens with China. So it's China's move next. Where do they go with tariffs? Where do they go with rare earths? Where do they go with their holding of U.S. government debt, which is substantial? China has a lot of cards to play. We'll see what happens, and we'll see whether they want to de-escalate, and we'll see whether Mr. Trump can find a way to de-escalate with respect to China.
Do you see any potential off-ramps ahead? So far, we've only seen the two countries going toe-to-toe in a matter of days. Where does this go next between these two nations?
Well, honestly, the most obvious off-ramp is for China to back down now. But politically, it's just very hard to imagine that they're going to want to do that. And so, therefore, I think as a practical matter, we're going to enter a new phase. It's about the United States and China. That's a very important set of issues strategically and also in terms of trade. These issues do need to be resolved. But are we going to do it in a peaceful, reasonable manner, or are we going to do it in some way that further destabilizes everyone's expectations and market prices?
Doug, in terms of the way that markets globally and investors are looking at this, of course, we saw these rallies today, which the White House is pointing to as a sign of success in the strategy. But that's, of course, in response to the tariffs being paused. Does that say to you that if the tariffs go back up or if negotiations don't yield some kind of results, those markets will plunge once again?
I don't know about plunge, but they will certainly go down. Once again, if you look at the tariffs that the Trump administration had planned to impose, in fact, did impose at 12:01 this morning, and then rescinded later in the day, they were very steep on other countries such as Vietnam, nearly 50%. And so those are really draconian tariffs, once again, historically unprecedented. This is only a pause. The tariffs on Canada and Mexico had been paused previously. But there's, once again, just creating a lot of uncertainty. They could go into effect in the future. The markets will respond to that negatively, but the uncertainty is just unknowable at this point.
Simon, it's a dangerous game to predict what happens next right now, but I'll ask you the same question in the last minute we have. What do you see happening now?
More uncertainty, I think, Amna. That's going to be the word for the quarter, maybe for the year. And it's very hard for businesses in particular to make any kind of sensible decisions when everything is so uncertain. Should we invest in this or in that, in the United States or elsewhere? Now, consumers obviously have to struggle with some of the same decisions. For them, the uncertainty may mean they might want to make some purchases now before tariffs go into effect. But on the other hand, they might lose their job, so perhaps they shouldn't make any purchases at all. So uncertainty is generally going to have a slowing effect.
Simon Johnson, Douglas Irwin, great to speak with you both. Thank you so much for your insights. Appreciate it.